So, emerging markets. If you happen to be from Singapore or Malaysia, you might be wondering, that's kind of weird, isn't it? Aren't we there? But at the same time, if you happen to be an investor who's heavily in the US, or maybe you're just really into local stocks, I think it's a region slash area that you might want to consider. So today, I'll give you a quick introduction of what is emerging markets, or EM for short, and what are the few reasons you might want to consider it, and then finally, what are your investing options with or without China? Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll save, invest, and feel better about money. So, I must admit that even in previous videos, I would have referred to EM as a region, but the reality is, it is such a mixed bag of different places, and that makes it very difficult to actually label. What gets classified under EM, it's usually the responsibility of those lords of indexes, and the two big ones in the world are FTSE or FTSE or MSCI, and they are the ones that determine that, hey, these group of countries happen to fall in EM. So let's take the super popular IEMG ETF, which is a plain vanilla emerging markets ETF. If you break it down by countries, the biggest by far is China and Hong Kong at about 30%. This is followed by Taiwan at about 15%, South Korea at 14%, India at 11%, and so on. And this is according to the classification of MSCI. So these countries are clearly very different, right? They tend to have a lower income per capita, but overall growth is faster than general versus developed markets in the West. Now, let me elaborate on the three reasons why in general people will consider EM as a worthy investment. The first one that I already mentioned was growth, which is generally faster than developed markets. But underpinning that growth is where it gets interesting.
Wow.
90% of the world's population under the age of 30 reside in emerging markets. With a younger population, you tend to have access to talent. Then there is jobs growth, then there's potential for income growth, productivity growth, and ultimately economic growth as well. And in contrast, when you look at the developed markets, it's the exact opposite with its problem of having an aging population. Now, the young population is also supported by the second point, which is where you have the technological advancement of the EM population. Consumer internet companies in EM have produced amazing results. This is in part powered by 1.8 billion smartphone users in EM, and this is versus 500 million between US and Europe combined. And according to another article I found, since 2014, there have been about 10,000 tech companies that have been formed in EM, and about half of that is actually outside of China. You simply need to look around, look at your phone, and you'll see that there are so many different type of companies that are being birthed and used in this region. The final major point is to do with market metrics. Did you know that even though EM accounts for about 38% of global GDP, it only accounts for about 12.5% of the world's capital markets or stock markets? The US is the opposite, where they have 26% of the world's global GDP, but their stock markets take up 55% of the value. Now, we are clearly willing to pay a lot for US stocks, and maybe for good reason. But if you look at the gap of value between US stocks and EM stocks, it is at its widest in about 20 years. Now, if you combine that with the knowledge that the US markets today are really highly valued, you could interpret that data in a couple of ways. One potential is that maybe US markets don't produce that much growth from here moving forward, and EM catches up to close that valuation gap. Or two, the US markets drop a fair bit, but EM markets maybe don't drop as much. Therefore, they close the gap of valuations. Either way, there's a potential for getting relative gains if you invest in EM. By the way, if you're enjoying this video so far, I would appreciate you hitting that like button because it helps this video reach more people. Thanks! Now, I wouldn't be doing my duty in providing a balanced view if I didn't say that EM has its own risks. In general, there tends to be a lot more political risk in EM countries. Look at what's happening with the Chinese tech crackdowns, Or maybe if you look at Brazil, another EM country which has a bit of a COVID denier type of president, also as a broad index, it hasn't been doing that well relative to what the US has been doing in recent years. And COVID certainly hasn't helped because some of the countries might have done better like China, South Korea, or Taiwan, but at the same time, other countries like Brazil and India have not been doing so great. So despite positive long-term growth prospects, I think there are still a lot of risks that you need to kind of accept before you invest in it. However, if you're still keen, here are the options that you can consider. Let's start with the most popular baseline option of buying the index, and that is the IMG ETF, which I brought up earlier. And this ETF includes South Korea in the mix. If you happen to browse and choose Vanguard's version of it, which is VWO, that's where you'll get a EM that doesn't include South Korea. Depending on your preference, you can choose either one. In the next tier of considerations, you can choose an EM ETF that has its own theme. For example, I own an ETF called AVEM, which is done by these guys called Avantis Investors. They blend indexing with a little bit of active management to still give you a pretty broad exposure to EM, about 2,000 plus stocks. But the way they do it is they tilt or they overemphasize certain qualities. In their case, they tend to choose more companies that have lower valuations, which are cheaper, and also higher profitability. From here, the universe really opens up to many different themes that you can consider. For example, say you really care about environment or social or governance issues and you wanted that theme, you could get it through ESGE. Or maybe you wanted an EM ETF that emphasizes the internet and commerce businesses. You can do that with EMQQ. So I think you get the point. So no matter what your interest is or your specific investing style is, you can find an ETF that is probably built for that. There's literally dozens if not hundreds of them, so I really won't go through every single one. Now instead, let me move on to the options should you be concerned about China. So as you might have read here and there, China has been increasingly seen as a risky bet simply because of its crackdowns and all its different regulations that are coming out of the blue. Is it mostly fear-mongering or is it an opportunity? So only you can decide to what degree do you want to avoid China. So let's start with the most extreme, which is I want EM but I don't want any China at all. For that, you can buy an ETF called EMXC. They kick out China and Hong Kong completely, and your highest weightage would be Taiwan and then followed by South Korea. The next option is that maybe you want to avoid state-owned enterprises, which is basically government having too much influence in a specific company. WisdomTree has an interesting ETF called XSOE or X State-Owned Enterprises, and they basically exclude any company where there is a government ownership of more than 20%. It's a really cool option, but you know what? It wouldn't have prevented you from the tech crackdown recently anyway. And that leads us to the next option, which is where you might want to avoid the Chinese tech industry, but at the same time still want exposure towards China's growth. And this is because one of the narratives is that it is the Chinese tech companies that have grown too big, too powerful, which is therefore challenging the Chinese Communist Party, and that's why they are kind of clamping down on them. The belief is that more traditional industries are less affected by this and therefore still worthy of investment. Now, if you're persuaded by that argument, you could actually take this approach where you buy two ETFs. The first is EMXC, which excludes all of China, and then you buy something like CNYA, which basically invests in what you call Chinese A shares. If you look at the breakdown of CNYA, you realize that it covers the more traditional industries where you'll have a bit more of finance, a bit more of industrials, consumer staples. They do still have a little bit of technology, but as you can see from the top 10 list, they clearly avoid the big names like you are familiar with, like Alibaba, Meituan and all that. The next option is something I don't like but I should mention, which is to actually trust an active fund manager through maybe a unit trust type of product. So the theory is that EM might still be a bit of an inefficient market, therefore trusting an active fund manager to pick the right stocks might be the right way to go. The reason why I'm not really a fan of this approach is that in general they are very expensive. Generally the costs are about 1.5 to 1.75% per annum, and on top of that, finding a good manager is easier said than done. The final option is for you to consider the actual countries themselves that have been classified under EM. For example, you can buy a Taiwan ETF called EWT, you could buy South Korea at EWY, or you could buy maybe India at INDA. The challenge here boils down for you to pick which countries that you want and ultimately find the right balance of how you would allocate your money towards each of those countries. Also, you should be prepared to pay a little more per annum in terms of expense fees. A broad EM ETF like IEMG is really cheap at about 0.11%. If you took something like AVEM that I'm holding, their costs are about 0.33. But if you start to choose specific countries ETFs, and India for example, INDA, their costs are about 0.69% per annum. So that's it. What's your take on EM? Are you somebody who's invested in it, or maybe you have a different style of investing in EM? Let me know in the comments below. So thanks for watching guys. I hope you got value out of this, and if you did, I would appreciate your support in clicking that like, sub and bell button, and I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.